Troubled AI server maker Supermicro Computer just gave us their business update for the quarter ended December 31st, 2024. And if I had to describe this business update using just one sentence, I would choose those words from the world-renowned chaotician Dr. Ian Malcolm, who once famously said,
"That is one big pile of shit."
So it's important to understand that what SMCI just gave us was not a quarterly earnings report, it was a business update. And you might be saying, well, what's the difference? Well, a quarterly earnings report typically involves the statement of financials that have been reviewed, audited, and approved by an accredited accounting firm. And considering the fact that no accredited accounting firm has been willing to touch Supermicro or Charles Lang's books with a 10-foot pole for more than half a year now, the best they could give us was their business update, which is pretty much just this guy saying a bunch of things. And you can totally believe him because this is only the second time in the last 5 years that Charles Lang and Supermicro Computer have been accused of accounting fraud. Now, before we pull a Dr. Sadler and go elbow deep in this gigantic pile, it's important to understand the sequence of events that led us to this business update on February 11th. The drama all began on August 27, 2024, when short-selling firm Hindenburg Research disclosed that they had taken out a position betting against Supermicro stock, and they released this bombshell report about what the company was up to. Now, there were three main elements to this Hindenburg report. The first involved two companies named CompuWare and Abelcom. It turns out the CEOs of CompuWare and Abelcom are the brothers of Supermicro CEO Charles Lang. It also turns out that Charles Lang, along with his wife, who's a member of the board of directors on Supermicro, are both shareholders in both CompuWare and Abelcom, as is Supermicro. This is known as an undisclosed related party transaction, and it is a big-time red flag. Now, undisclosed related party transactions could be used to either rob your shareholders blind by overcharging for cost of goods sold in order to benefit personally, or they could be used to artificially pump your stock by undercharging for the cost of goods sold in order to make your company appear much more profitable than it really is. Either way, Supermicro failing to disclose this is a huge problem. Now, another facet of the Hindenburg report was that Supermicro was engaged in rampant violation of export controls and sanctions against countries like Russia and China, something I found substantial evidence of in this video where I highlighted entire warehouses in China full of Supermicro servers where it's illegal for them to be sold. And the third shocking allegation against Supermicro was the disclosure of a whistleblower lawsuit where a former employee claims he was fired for raising concerns about improper revenue recognition, on top of the fact that the company had apparently rehired all of the people that it had fired or let go following their previous accounting fraud, this one, and that as soon as they got their company relisted, they just hired back all the crooks who had previously committed that fraud. Now, typically what happens following a short-selling report like the one we got from Hindenburg is the company issues a strongly worded denial. They announce that they're probably suing or exploring their legal options, but that's not what we got. Instead, a day later on August 28th, we got this one from Supermicro where they announced that they were delaying their 10K annual report. Now, this was a huge revelation because this means that Supermicro's independent auditor read what Hindenburg Research said, and all of a sudden they were unwilling to sign off on any of the financial statements from the company, which lent a lot of credibility to the accusations Hindenburg had made. Things went from bad to worse for Supermicro about a month later when the Wall Street Journal dropped this bomb that the Department of Justice had launched a probe into Supermicro following the allegations in the Hindenburg report, again lending credibility to what Hindenburg was saying. And the hits just kept on coming for SMCI. On October 30th, the company's independent accounting firm, Ernst & Young, abruptly resigned from the company. Now, it's worth pointing out that this is the second of the big four accounting firms to abruptly resign from this company in 2 years. Deloitte had previously resigned in June of 2023 abruptly. Now, it's typically very bad when your independent auditor abruptly resigns, especially when it's the second one to do so in 2 years, especially following the announcement of a short-selling report and especially following the announcement of a DOJ probe. But the most shocking aspect of this announcement was the language Ernst & Young chose to use. Ernst & Young resigned, and they said that they were unwilling to be associated with any financial statements made by this company or their management team. They're basically saying Charles Lang and his team are a bunch of liars, and we will not stake our reputation on anything they're saying.
That is one big pile of shit.
And things just kept getting worse for Supermicro. Just a few days later, on November 4th, the company disclosed that they had received a letter of non-compliance from the NASDAQ and that they were facing delisting. The company had just 11 days to file their audited financials in the form of their 10K annual report and their 10Q, something that is impossible to do when your independent auditor resigns, calling your company a bunch of liars, and that if they didn't do that, they were going to be delisted from the NASDAQ, which would be catastrophic for the stock. And as that November 15th deadline approached, Supermicro stock continued to sell off, at one point trading down 85% from its high as that day came and went and the company still had not returned to compliance. But it turns out that would mark the bottom for Supermicro stock. Shortly after the closing bell rang on November 15th, Supermicro Computer announced that they had filed a compliance plan with the NASDAQ. Now, they still were not in compliance, but because they had filed a compliance plan with the NASDAQ, that triggered an automatic 2-week review period where the company would not be automatically delisted first thing Monday morning, because the NASDAQ would give them 2 weeks while they reviewed their plan and decided to either delist them or grant them an extension. Now, as part of this announcement, Supermicro also disclosed that they had hired accounting firm BDO to serve as their new independent auditor. This would be their third auditor in 2 years. Now, BDO still hadn't signed off on anything, but at least had agreed to look at their books. Supermicro stock would surge again just a few days later on December 2nd, when the company announced the shocking revelation that they had investigated themselves and found no wrongdoing. And you can totally believe him, because this is only the second time in the last 5 years that Charles Lang and Supermicro Computer have been accused of accounting fraud. Things would continue to improve for Supermicro on December 6th. This was their second delisting deadline, when the NASDAQ announced that they had reviewed their compliance plan and had granted them an extension until February 25th to return to compliance by filing those audited financials approved by their auditor. Now, it's important to note here that as of this point, Supermicro still had not filed any financials. No auditor had signed off on anything. This was really just a stay of execution. And that pretty much brings us to this week and the release of this business update. Now, as previously stated, this was not an earnings report. This was a business update. And so we can add this one to the pile: Supermicro unable to file quarterly report in a timely manner. Supermicro said it is unable to file its quarterly report for the period ended December 31st, 2024 in a timely manner without unreasonable effort or expense. As previously announced, the company has been unable to file its annual report for the period ended June 30th, 2024, and its quarterly report for the period ended September 30th, 2024. So for you folks at home who are trying to keep count, that is now 1 annual report and 2 quarterly reports that the company is past due on. Supermicro intends to take all necessary steps to achieve compliance with the NASDAQ's listing rule as soon as possible. The company said it needs additional time to finalize the financial statements. Of course, those financial statements were due back in August of last year, but these things can't be rushed. So now that we've established that, once again, this is just a bunch of things being said by a known liar, we've got Supermicro is confident it will meet the SEC deadline and reach $40 billion next fiscal year. Why not just make it $1 trillion? CEO Charles Lang said he is confident the company will file its delayed annual report by the SEC's February 25th deadline. The company also said it expects to hit $40 billion in revenue in fiscal 2026. And you can totally believe him, because this is only the second time in the last 5 years that Charles Lang and Supermicro Computer have been accused of accounting fraud. For the near term, however, the company slashed its guidance for fiscal 2025 revenue. The company said it expects revenues to range between $23.5 and $25 billion for fiscal 2025. That was down from a previous forecast of $26 to $30 billion. The company also said it expects to report net sales between $5.6 and $5.7 billion for the quarter ended December 31st. Wall Street had expected $5.89 billion. So even though these aren't official statements, this is a miss on the prior quarter and a guide down for 2025, but they're guiding way up for 2026. Now, in this Wall Street Journal article on the same business update, we did get one important little soundbite. None of its previously issued financial statements require a restatement, though the delayed filings have affected fiscal 2025 results, the company said on Tuesday. So the company is saying even though this is not an audited financial update, and even though our third auditor in 2 years still won't sign off on any of our financial statements, don't worry, we're not going to have to restate any of our previous finances.
And you can totally believe him because this is only the second time in the last 5 years that Charles Lang and Supermicro Computer have been accused of accounting fraud.
Another important tidbit in this business update that the media has really glossed over was this one where Supermicro finally acknowledged that, oh yeah, we did get subpoenas from the Department of Justice and the Securities Exchange Commission, as Wall Street Journal had previously reported. And on top of admitting to DOJ and SEC subpoenas, as well as adding to the pile of overdue homework, Supermicro also announced that they're diluting their shareholders too. Supermicro announces private placement of $700 million of new 2.25% convertible senior notes due 2028. So it looks like dilution is the cherry on top of this poop sundae that shareholders are being fed by Charles Lang.
That is one big pile of shit.
So if we could rapidly summarize this business update, you've got a miss on their quarterly and annual numbers. You've got a guide down for 2025, a guide up for 2026, another overdue quarterly report. They still haven't filed their last overdue quarterly report, and they still haven't filed their overdue annual report from last year. The company is now just days away from being delisted again. The company is diluting shareholders. They're admitting to subpoenas from the SEC and the DOJ. But don't worry, 2026 is going to be great. Now, media coverage of this story has been mixed. Some, like CNBC and Wall Street Journal, have pointed out that, yes, all of these bad things that have already happened are still out there and they still have the auditing problem. And yes, some of those numbers weren't really that good. But on the other hand, some media coverage has just been outright awful. Listen to this one at Yahoo Finance.
But when we heard that potential, 40 billion going into 2026, I think that's really what perked up investors. And they have a unique story here, right? I mean, they pretty much provide data center servers, liquid cooling technology for some of the top data center AI companies like NVIDIA and AMD. And so, they have this key relationship with the leader of AI. And I think that, they have this unique product that essentially no one else on the market has. And so they're well positioned to be a top player as AI continues to grow. It seems as though they're a leader in a space that doesn't have as many, cooling technology server options as NVIDIA needs for their Blackwell chip. And then I think if we actually see those revenues start to bump up on the second half of the year, making it feasible that, we get that 2026 projection, I think that's something that will really, bode well for the stock and for the market. If you have a leader like NVIDIA in the space, you have to think that, and AMD, you have to think that all of the other chip providers will start to step in and perhaps utilize their services once they have a clean slate.
Now, if that didn't sound like unbiased analyst coverage and sounded a little bit more like a sales pitch for the stock, that's only because, that's exactly what that was. That was a sales pitch for Supermicro stock. You have to consider the source of who is talking in some of this media reporting and where their interests are. The person that you were just listening to was Sylvia Jablonski. She's the CEO of Defiance ETFs. That's the same Defiance that runs the SMCX 2X levered long Supermicro ETF. That's right, folks. There is a levered long ETF made up of a single stock that's designed to cash in on the casino of retail traders piling into Supermicro while charging a ludicrous 1.29% expense ratio. And the lady who runs that ETF just gave a long-winded sales pitch of Supermicro stock, and nowhere in this clip did Sylvia Jablonski or Yahoo Finance disclose any of that information. Now, Sylvia Jablonski didn't totally ignore all the problems at Supermicro, but listen to some of the soft language that she used to describe the mountain of issues facing this company.
And with this company, as we know, it's just all about some of the accounting and reporting things that have spooked the market. But it seems like, if we get good news that they're coming out of that and projections for 2026 are good, it could be smooth sailing for Supermicro. I think what holds investors for fully coming into the stock and, kind of like fully adopting their technological prowess and leadership in the AI space is just that, right? Because of the Hindenburg kind of report that came out and what came after that. I think February 26th is going to be a key date. If we see that, they're able to file their updated statements and everything is sort of kosher there, I think that's something that ends up being a tailwind for the stock, and it could potentially, climb higher. February 26th will be telling, right? I think if you get a situation where the audit and financial statements are not acceptable and it kind of comes off of the NASDAQ, I think NVIDIA would have to do their due diligence and kind of, weigh their options. Part of this will be, again, just kind of getting, past February 26th and having a steady run of clean reporting and filing on time and things like this.
That is a fundamentally absurd and outright disingenuous way to describe a company that has more red flags than a parade of Chinese youths helping the Communist Party pretend Tiananmen Square never happened. Now, there's a couple of ways this story could play out. We're inside of 2 weeks of that February 25th deadline, and one of a few things could happen. The first and the worst is that BDO could refuse to sign off on these books, and Supermicro could refuse to make the changes they're demanding, in which case that deadline would come and go, and the company would be delisted from the NASDAQ, in which case a lot of the institutions that are invested in Supermicro would be forced to dump the stock, and this company would crater. It's also possible that BDO just signs off on Supermicro's books. This story all goes away, in which case the stock would rally tremendously. It's also possible the NASDAQ could grant them yet another extension on their filing deadlines, something that would really damage the NASDAQ's credibility. But in my opinion, the most likely outcome is that Supermicro restates their previous financials in order to get BDO to sign off on their accounting. Now, when they restate those financials, the magnitude of any downward revisions to their prior earnings or revenue statements is what will determine where the stock goes from here. Maybe those revisions are immaterial, or maybe they're massive, kind of like they were at Enron, and this will facilitate the eventual collapse of the company. But as of this point, nobody knows. All we have is a lot of questions. Supermicro has not answered any of them, and the company is once again running out of time. Till next time, live small and dream big.